Good evening, everyone. Time for another silver update. This is the weekly chart of silver provided by netdania.com. You can click on the link below. Now I've got a new indicator here. I like to play around and look at some different indicators. The one I follow, of course, the most is the MACD. This indicator that we're looking at here is called the DMI. It's the Directional Movement Index. It's actually a trend investing indicator, and it's one that gives you an idea if the trend is going in your direction. So you can see the red line. When the red line is moving up, you've got an uptrend. That's very clear. That's very consistent with these prices. Now I'm looking at it kind of the opposite, the way that it's designed as a contra indicator, a trend change indicator. So I pointed out a couple of spots here on the chart. If you look at the indicator here, you can see that for the vast majority of the time, I would say probably at least 80% of the time, the red line is above the blue line for a positive trend. And that makes sense because silver's in a bull market, in my opinion, a very long-term bull market, probably 10 more years or so to run in this bull market. But the thing I wanted to point out is the divergence, the oversold condition in this indicator. Now you can see before we had this run up here that occurred before the Buffett spike, we had this divergence with the blue line up and the red line down. We didn't really see that again until we got to this divergence here in 2008. And you can see we had that big divergence where the blue line was up and the red line was low. Of course, that exact point marked that 2008 bottom. Now you can see where we are right now. The blue line is actually starting to fall. It's made a peak, and I drew lines from the previous peak, the highest peak the blue line had ever made, and the lowest, near the lowest the red line had ever made. Now you can see we're way outside of those bounds. So if this indicator is used as a trend change indicator, then you can see that this is projecting a rapid change in trend, and it is only when they actually cross and the red goes higher that you have a breakout. So you can see that with the breakout that we had here. This is actually when the red started to accelerate. They were already crossed. So what does this project for the silver market? Well, if patterns follow historically, then these two are going to cross, and then once they cross and start to move away from each other, as the blue moves down, the red moves up, you're actually going to see an explosive move up. So I expect that if this follows historical patterns, you'll see a move to about 27 or 30, then a cross, then a move much, much higher. So just like the MACD, let's wipe this one off and pull up the MACD. We can pull up the stochastics. We can pull up a lot of indicators. All of these indicators are showing that the paper silver is tremendously oversold. Here's the stochastic momentum index. You can see we're more oversold than we've ever been, including 2008, starting to turn up. So all the indicators are indicating that we are moving higher, that perhaps the bottom is in. Now, the recent action comes from the statements by Bernanke, and the Fed is, I've pointed out many times, they're in a box. They like to use deflation scares to push the markets down, the metals markets specifically. But we had this breakout in the Dow Jones Industrial Average into new highs. So the Fed has already backed off of their latest deflation scare, and you can see that the Dow is now very close to doing a breakout, a V-shaped breakout into new highs and rising higher. The bond market, of course, is starting to reverse, so we're back on that QE train, and the metals may just rally very violently. So we want to look at some stuff that Jim Willie pointed out today, and William K. as well on King World News. But before we do that, let's take some questions. The first one is from CHC, and he just says opinion. This is actually, I think this is the latest interview with Dr. Paul Craig Roberts, where he's being interviewed by Greg Hunter, USA Watchdog. And basically, to summarize what Dr. Paul Craig Roberts said, is that the U.S. is trying to prevent the endgame scenario for the petrodollar coming about, and he's saying that there's a possibility that the U.S. can extend this game for a number of years further before the whole thing blows up. Of course, when pushed, he admits the whole thing's going to blow up either way, but he's speculating as to how much further the U.S. can keep this game going. Now, I have to say right off the top that I have been consistently wrong in my predictions of when this thing would come to an end. I thought that the stock market crash of beginning with the NASDAQ in the late 90s and the Dow following, I thought that was going to be it for a long, long time. Of course, they reflated that and brought us the housing bubble. And then I thought that when the housing bubble crashed and it brought all the markets with it, starting with Bear Stearns in 2008, I thought that was going to be the big one. So now I'm looking for the big, big one, and I could be wrong again. So I have to give Dr. Roberts credit. They always seem to be able to push things off to the next guy's watch. Now we know that Bernanke is on his way out. He's going to try to push things off to the next guy, and we'll see how the next guy can keep all the balls up in the air. Next guy, or gal, I should say. And next question is, why does government hoard? Dear Brother John F., this is from Silver Tin Man. Love your work, your diligence, tremendous insight, dedication. It's greatly appreciated. I have some comments about gold, but as we know, gold and silver are inseparable, as there's a direct relationship for a myriad of reasons. Why do the financial media and our elected representatives not call out the fallacy of government and the Fed's potions on precious metals? Government and the Fed cannot own both sides of the argument on the value and usefulness of precious metals. They cannot hold the position that gold is simply another commodity and yet hold it in such vast quantities out of circulation. If gold is simply another commodity, then it should be all put back in the hands of the people, etc., etc. This is really long, so I'm not going to read the whole thing. But if you remember when Bernanke was questioned by Ron Paul, asked whether gold was money, his answer was, no, it's not money, it's just a commodity. And then, of course, Ron Paul came back with, well, then why do central banks hold it? And Bernanke's answer was, it's tradition. So I think that you can actually say that Bernanke is possibly being consistent on this. And here's the reason why. I think that it may be possible that they're not holding any gold anymore. They're selling off all their gold to the east, and they are going to have another change in policy that will cause tradition to fail. Now, I've covered a number of times how the West has cheated China out of their wealth multiple times, using silver and using opium wars and other things like that. Will they succeed again in cheating China? I don't think so. I don't think they're going to this time. I think they're actually going to fail, and I think China's going to win. But then again, I'm not going to make any bets on that because they have been very successful so far. So the point of it is that the Fed actually may be consistent here in saying that it's tradition, and it appears to be a tradition they're no longer following, and the Fed may be planning some other system, an electronic system, a special drawing rights system, and for that reason they are letting go of all the gold and letting other central banks store up all the gold. So maybe they have an ace in the hole. Maybe they have something that they're planning for the next system, but maybe they're totally wrong, and they're going to go down the tubes and remembered as complete failures in history. And last question, MSM deliberately biased, from Are You Christian? Dear Brother John, I thought that you would be interested in the following Kitco video, and there's a link. David Gerwitz of Charles Nenner Research states that Mr. Nenner was told by a major show that they wanted him to speak negatively about PMs. When Mr. Nenner said he had nothing negative to say but only positive things, they refused to interview him. How is this for direct evidence of MSM bias? Keep up the good work. Well, nobody needs any evidence to prove that the mainstream media is biased. The mainstream media is bought and paid for. They're told exactly what to say. It's not a coincidence that they all run the same stories at the same time. They're anti-gold. They've always been anti-gold. And as Mark Faber has pointed out recently, all these people calling for a gold crash, a gold bear market, none of these people have ever owned gold. So what credibility do they have? They have zero credibility. And I think it's actually very damaging for them to do what they do, because they're becoming very transparent. Their bias is so obvious that they are losing credibility rapidly. Now we know they're losing viewers very, very rapidly. We have a lot of mainstream media networks that are just going down the tubes. A large number of people are saying in polls that they're getting their news from the internet, and so they've really spent their capital of credibility. They don't have credibility anymore, so it's not surprising at all to see them bashing gold. We all know why they do that. They're simply puppets of the central bankers. So let's look at the latest Jim Willie that's over on Silver Doctors. I wanted to talk about a couple of things that Jim Willie's talking about here. First of all, he talks about the volume of U.S. Mint and Canadian Mint silver coin sales. The volume exceeds the silver mine output for the two nations by an estimated 25 million ounces for the current year. Therefore, all industrial North American silver demand is in deficit. The demand has seen a quantum jump up since April market ambush with no let-up. The U.S. government had announced some rationing plans, but they are obligated by law to honor all customer orders. They must be importing silver. Now, I've talked about this for a while. The main figure that we're talking about for North America, the U.S. and Canada, we're talking roughly that 50 million ounce figure. Now that's going to be about roughly, I don't know what the percentage is, not a large percentage. It's 50 million out of 750 million that is mined every year. So that's going to be around 5%, a little bit more. But that's all that they mine in North America, and they're obligated to initially get the silver from mining. Now, Bixwer has pointed out that they kind of fudged on that regulation, that given the Treasury Secretary the ability to change that. But nevertheless, the important point is that the demand for physical silver in the United States and Canada is now beginning to outstrip the supply, and that means they must be importing silver. And where are they going to get that silver from? Now, I saw a chart today that was comparing the delivery amounts on the Hong Kong exchange as opposed to the CME, the COMEX. I pointed out for a long time, as FOFOA has mentioned, that only 5% of the physical silver that's delivered each year, the real stuff that's delivered to be used, only 5% is delivered on the COMEX. So that's been the case for a long time. The COMEX is really an irrelevant player. The miners are dealing directly for the most part, and then the LBMA, of course, is a big player. The COMEX is just a U.S. paper market where they trade pieces of paper back and forth, and they have the name silver written on them. So The next big story I think is really important. If you listen to the interview with William Kay on King World News, William Kay is in the gold business in Hong Kong, and he is directly boots on the ground for that operation. And you can see here that Jim Willie points out the growth in Chinese gold imports from Hong Kong. The growth is impressive. Just when the growth more than doubled in the past couple of years, doubt rose of its continued path, yet the growth rate is at 100% annual rate for the year 2013. A picture truly is worth 1,000 words and tells the story. The months January through April in 2013 saw a total of 498 tons moved through Hong Kong, a 108% increase. The East continues to buy any and all supplies put before them. The greatest transfer of wealth in world history is underway. The West sells fraudulent bonds while the East purchases gold. So you can see this chart from Jim Willie and Silver Doctors. We're only just a little bit halfway through the year, and you can see that we've already exceeded the entire year of 2011, and we're at 75% of the year of 2012. So 2013 is looking to continue this exponential rise, and this is exports from Hong Kong into mainland China. Now, as William Kay pointed out in his interview with Eric King recently, and he's there operating, involved in this trade, Hong Kong doesn't produce any gold at all. So the question is, why is Hong Kong exporting so much gold to mainland China? And of course, the answer is going to be that China is taking the gold trade and making its own. In other words, China is importing gold through the Hong Kong banks and bullion banks. What they're doing is they're going to the LBMA and wherever else in the world they can find that gold. They're bringing it into Hong Kong. They're melting it down, as William Kay points out. They're putting new stamps on it, and then they're taking those gold bars after they've been assayed, they've been verified, and they've been certified, and then they're sending that to mainland China. So China definitely has a plan. They are intending to, in my opinion, back the yuan with some type of precious metal backing, perhaps a basket of commodities as well. But China is looking at the long-term endgame here. And as I pointed out, that with the draining of the gold from the West, that Ben Bernanke actually may be telling us the truth, that he considers gold and silver to be relics, that they're not really money, and that money is going to be electronic ones and zeros in digital entries in bank accounts. And apparently he and his cohorts intend to control that, and that gold and silver will be put into the dustbin of history as far as their relevance as to what is money. I think Ben Bernanke is going to be proven to be wrong when it goes down, and the Chinese are going to be proven to be right, that gold is money, and that the electronic digits that Ben creates with his computer are not money. And we're looking at the long-term secular decline of the West, long-term secular rise of the East. And we'll talk to you next time.